pre-COVID, we were performing steadily. We were returning value to the shareholders. We ended last year, 2019, in a good position. As you said, we were the second best profitable bank. Stepping back a bit, even years before, we were not doing badly. We were growing at a steady pace. First quarter, COVID had already kicked in. Wasn't so bad, but the last part of March, since the lockdowns had already been implemented, economic activity wasn't as much, so the bottom line wasn't as well as expected. Fast forward, quarter two, since April was a lockdown, May half of it, lockdowns meant no economic activity. I think at best what people did was to buy purchases for home use, but most economic activity, lockdowns were not only in Rwanda, they were in the region, they started in China. All our trading partners had specific challenges. When the airlines stopped, that put a complete standstill, the largest contributing sector to the economy here, which is services. And among the services, tourism and hotels ranked number one. I would suggest that the shareholders at this point in time, it is probably another call on them to support and sustain the businesses, because if they try and take out what they expected in form of a dividend, given the chronology of events, things are still evolving. We don't know how long COVID will stay with us, but indications and research shows COVID is here to stay with us. It will take a bit of time. So that the health crisis may be subdued for some time, because different governments are putting different measures. People are now fully aware of self-protection. Although the numbers are increasing in some places, but that our expectation is that if all goes well, the health crisis by the end of this year should be dealt with largely. The economic impact, which is the second impact of COVID-19, the economic impact it will leave with economies or with the world is significant. For nascent economies, like most African economies, the economic crisis the virus will leave could probably take between 3 to 5 years to recover. And I'll give an example which will shape the question, the answer to the question you're asking me, what do I give shareholders? If the hotel industry and the airline industry probably takes, let's assume that the hotel industry will open up soon because it's safe to go to a hotel. We are wearing masks and other things, but who uses the hotels? Usually, most hotels in Rwanda certainly are dependent on foreign traffic. People coming from outside the country who come and sleep in the hotels, eat in the hotels, and conduct business in the hotels. Yes. Now, how does international traffic come? The airlines must open. If the airlines open, there will be another issue of who is going to use the airlines. If, for instance, Rwanda, with the efforts that are there, it's free of COVID, or there are mechanisms to control it or cure it, but the neighborhood remains largely exposed. Which tourist is going to say, I am safe in Rwanda, let me just go to Rwanda only because I feel comfortable? Secondly, where these tourists were coming from, those economies have also been hit. Probably they have also used their savings, or they have also used their savings to survive or to invest. By the time they start thinking of holidays and to come to Africa for leisure, probably it will take another 2-3 years to accumulate that and to create a sense of trust that that their health will be safe if they come for tourism purposes. It will take a bit of time, and we're talking about between now and then. If then is say in 2-3 years, and the money that have invested in those sectors, in logistics, in hotels, remain unpaid, because the only money I make as a bank is on interest. The rest is money that I take back to the depositors. What do I then give the shareholders? What do I give them to? It does paint a scary image, but the shareholders have also a choice to make. To support the business by retaining the dividend into the business, so that dividend can continue to see back the operations of the business in form of capital. The business remains in strong position on capital, so they can be able to play the role. They should buy it, and I'll be honest with you, I think you saw Equity Bank Group withdrawing the proposal had made for dividends of profit made in 2019. So this profit remains with the bank and supports the bank to remain in a good position, because the loans that will not be repaid because of the impact of COVID on those businesses, I will have to do provisions or either write off or work with the customers, and it will take me 3-4 years to get any profit from those businesses. So by that time, where will I get capital? Because capital is made out of wealth creation, or if there's low economic activity, chances are the build-up of capital is also very low. If the shareholders take out in form of dividends, then the business becomes a challenge. And remember, we have capital prudential requirements to observe. The businesses currently don't look so bad. Yes, there's been an impact of COVID on, if people are making sales of 100,000 Rwanda francs, now they are making 50,000 Rwanda francs. But is it going to remain at that level? No. The plan is in place. For instance, the Economic Recovery Fund, you saw the government pushing forward to support that economic activity to come back to the normal levels, will help. But there's also an opportunity for innovation. What else can people do? What other sectors that they can make money? If, for instance, I've been in the sector of supplying an airline with consumables, and now the airlines are not flying, can I supply something else to somebody, to Simerwa, who is making cement? Can I supply clinker to Simerwa? Can I supply packaging material to Simerwa to bag the cement? And that thinking needs to now become eminent. Which other areas? And certainly there are specific areas that we've seen an opportunity, and which should then give the shareholders hope that we will direct the capital towards the right place and create value for them. Agriculture is number one. Whether people remain at home or in the office, they'll have to eat. We will all have to eat. Even those in the hospital or in quarantines will have. There's forms of making value in agriculture. So food and food supplies. We all now, if it was possible, we could be employed in the agriculture sector. So that if you're not farming yourself on primary level, you are involved in either post-harvest, or you're involved in the export of that food, or you are advising the farmers to do something. So that there is an opportunity for everybody to fit within. Pharmaceuticals. You and I have to buy these things, and these now, they are being imported from China. We've seen currently some made out of made in Rwanda effort. That is an area that people can look at. We also know that because COVID has changed the way we live, is it now not possible for me to put up an IT company and support you to work from home? What COVID has done is changed the how, okay? But the relevance of what somebody has been doing, and I'll give an example of banking. Will people still require to pay a payment platform to pay each other? Chances are yes. Will the population still require a bank account to bank money once they've made it? Chances are yes. Will still people require cash flow gaps financing? Chances are yes. The difference is on how. Okay? Now, I need to figure out how I remain relevant to you And probably it will take time to build the same momentum. That's why I'm saying shareholders need to be a bit patient for now. I may not have the sales volume I had pre-COVID, but if I start serving you using an online platform, number one, I will need money to invest in the online platform to be able to serve my customers. Number two, it speaks to the economic viability of that model. The way I've been doing things, the cost structure is different. I could now say, if I've been operating a bank on a cost structure that is what we call cost income ratio, every 100 I make, I use 50 in costs. Okay. Now with the use of technology, I could actually make 50 but use 10 as cost. So it's the how that is changing, but as to whether people will still require the services, the products, banking services will continue to be required, but banks may not be required. What you call banks is a physical place. There will be crowds of people, so they will not end up not coming there because they don't want to be exposed. You don't want your life to be in danger. Okay? But you require to bank. So if I don't give you an online platform to do your banking and pay people from your comfort of your office, because you're not going to hold cash anymore to go and pay for your airtime, to go and pay for or buy goods in a supermarket, but you will require to buy bread. So you'll go to the place, or you'll use an e-commerce platform to deliver bread to you. So that's where the banks need to go, in my view. And as equities, certainly that's what we are doing. The choice I've made is not to get worried, because worry does not help. It makes the situation worse. Because whether I worry or not, the real issues are there. When I wake up every morning, I don't know how many cases are there. Yeah, and I wake up every morning, I don't know who of my staff will be affected tomorrow. As I wake up every morning, I don't know who of my customers' cash flows will be wiped out completely. I'll give you an example of the airlines or the hotels. One day there was cash flow, and the following day, zero cash flow. Okay? The worries that I have is I have seen this. Is this all? Because this I can confront. Okay? I have even figured out on each, and in fact we've done a thorough analysis of the sectors and seen per sector what should be our response. The hotel sector, what should be my response? So instead of worrying, what do I need to do? So I've formed a mechanism around almost every sector. But what I don't know, and which probably speaks to what worries me, is this all? Or there could be more? If there is more, and certainly the opinion I have, there will be more. But if there is more, how big is it? I don't know yet. And that puts my actions in question, because I don't know whether my understanding I have around the sectors and the risks currently is enough. Because we are in a quickly evolving situation, things are changing every day, I can't quite put my arms around the problem, because the problem is changing every day.